The stock market's down, people are freaking out. We're down around 10% from the highs recently in the S&P 500, and people are acting like the world is about to be over. But I would like to remind you of a few things. Just recently in 2022, we were in a bear market. The market was down over 20%. We were not in a recession. However, we were in a bear market. Before that, 2020, you know what happened there. And then before that, 2018, we were down almost 20% from the highs. We were not in a recession, but we did see a very big correction in the S&P 500. We've been here before. There is always going to be something going on that is bringing the market down after a strong bullish run higher. There are political issues that are going on affecting how the market is reacting to tariffs, of course. However, the market was already overstretched. The market was already due for a correction. At the highs of the S&P 500 most recently, it was getting difficult to allocate capital because of how expensive things were fundamentally based on valuation metrics like price to earnings ratios. And to be frank, even with this market correction, the stock market still isn't cheap. We're still way above the 10-year PE ratio average of around 18. There is more downside potential, but I wouldn't consider it a bad thing. I would consider it an opportunity.